What's going on, everybody? I've got another educational video for you guys. I'm seeing a lot of questions around PTs and YTs, around Solstice's USX or EUSX, and I figured instead of answering all of the questions individually, it might be better if you understand yield trading as a whole. So I made a small presentation that hopefully simplifies the whole concept so that your answers or your questions are then answered. So create a little presentation. Let's see how it goes. All right. So what is yield trading? What are PTs and YTs? So instead of using tokens, I decided to do something that's maybe a little more physical. So imagine you have a house or apartment. We'll call it a house that's worth $100,000, right? And you're renting it out to, let's say, a couple for $10,000 a month. You have an asset, a house, and you have a yield or an income that's generated from it, $10,000 a month, right? Now that's a normal system. If you want to get into yield trading, you need to add one more component, and that is time. For yield trading, it needs to be bound by some time frame, because with these three elements, you can then create a contract, right? Where you put the house and all its rent money for 1 year together, right? You package that together into a contract, and once that's packaged, you can then split it again. And it sounds weird that you have to put it together and split it, but just bear with me here. So the PT that you will hear represents the house portion of it, the asset. The YT will represent the yield or the income that's generated for that house over the year, right? Those are packaged together and then they're split into PTs and YTs. Let me break down those a little further, and we'll go with the YT first. With the YT, we know it's $10,000 a month, right? So after a whole year, you should earn $120,000. Now, we're going to say that it's around $10,000 a month, and that is a little more volatile, like it's not for certain. Who knows? The mayor might change rules on like people who own houses. They might cap rents, or they might, inflation might increase it. So you're estimating it's $120,000 after the year, but you don't totally know. So if you were to buy this YT, you would want it on a discount. One, because it's not for certain $120,000. And two, you have to wait the whole year to collect the rent. So you're buying the rights to collect the rent. And so let's say, this is all decided by the market, by the way, it then goes for $100,000. So you look at this and you're like, hey, I could own the rent of this house for a whole year for $100,000. If it ends up being $120,000, then I make 20K, right? I paid 100K for it. 1 year passes, I get 120K in rent. That's 20% APY. Cool, I'm gonna get into YT. Now, this one is the volatile, riskier investment of the two. And because of these properties, YTs always go down in value over time, because on day one, you have 12 months of rent to collect. So it's worth a lot. But on day 365, there's no more rent to collect. And so it's worth zero, right? So YTs over time go down in price. If you stopped halfway at like 6 months, you would have collected 6 months of rent, so maybe 60K, and you would have had 60K left. So the price might be around half. To buy one YT might be 50K because you're already done half of it. I hope that makes sense. On the other side of the equation, there's the PT for 1 year, and that is the house itself. That is the asset. Except now this asset for a whole year won't be collecting rent. So it's not really worth $100,000 if you have to buy a house and you can't do anything with it for 1 year. So it then also sells at a discount. So if you're on the PT side of the equation, you're buying assets on a discount. You're buying yield generating assets on the discount because you have to wait the whole year before you could fully own it. And that's why the house might sell for $84,000. So if you decide to buy this house at the end of the year, you could make about 16K just for having a house and waiting. And that's why it's also the safer side, especially when it's stable coins, because the stable coins will for sure equal $1 and you can be buying them for 84 cents. But you do have to wait to realize the yield. And in the same way, but in reverse, PTs gain value over time because they slowly go closer to their full value where you kind of fully own it. hope that makes sense. If we were to recap and kind of tie this back into Solstice, the house represents USX or EUSX, which is the asset. The rent money represents the flares that get generated from USX and EUSX, and the APY. So you do collect some money in the Solstice ecosystem by getting into YTs. And then time is the same, although there's different time zones, which we're going to just check in a second. So yes, as a recap, PTs tend towards up, tend towards 100%. YTs go down to 0 as the time finishes. So if we look on Exponent, you can see that there's different expiry dates here. So this one's going to end in June. That's when the contract end date is. There's one that ends in March, and then there's one that ends actually tomorrow. So be sure to be looking at the contract dates. You can do your own calculations. Some of them are kind of made for you. Underlying APY represents the rent money represents the, one second. The underlying APY is what you're collecting on the YTs that's getting flipped. So yes, so this is the rent. Yes, the rent money collected, while the implied APY is the discount that you think you're getting. Okay, so yes, this would represent the 10K a month that you're collecting. It could go up or it could go down. It could be 11K a month, it could be 9K a month. And then this is the current price that you think you're getting a discount on. So let's take this 10%, for example. If we're going back here, you're imagining that you're getting a 10% discount. So the implied APY, if it was 10%, means that you're buying it for 100K, and by the end, you're going to collect 110K. That's the implied APY. And if you're getting 120K, then you win even more. Okay? So, might have lost you at the very end there, but hopefully you get the concept of PTs and YTs, because that's the farm tab is all YTs, the income tab is all PTs, and then liquidity is when you're just putting in your tokens so that people can trade. So you have a mix of the two, but it's usually just PTs and the underlying asset. Anyways, hope that was helpful, getting a little long, but if you got any questions, drop them below. Cheers.